Good afternoon, ladies and gentlemen. I'm Shilpa Abraham, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the annual financial results of Punjab and Sindh Bank. Please note that this conference is being recorded and all participant lines will be in the listen only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Managing Director and Chief Executive Officer Shri Swaroop Kumar Saha, Executive Director Shri Ravi Mehra, and Chief Financial Officer Shri Arnab Goswami. I would now like to hand over the conference to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Yeah, thank you, Shilpa, and good afternoon, everybody, for having joined this analyst meeting and ConCall for the Q4 results of Punjab and Sindh Bank. I know that the results have been declared on Friday, and then subsequently the presentation has been also uploaded. So I'm very sure that most of you must have been able to go through the presentations for the potential question and answer session today. But to set the context for today's meeting and this call, I just like to mention some of the highlights of the bank during the year 23-24 and particularly of March quarter. The business of the bank grew by 7.72%, advances grew by 6.15%, deposits at 8.89%. I'd like to mention here regarding the deposit growth and the advance growth. We may look that our growth has been muted, but we are trying to build up a momentum for sustainable growth. On the deposit side, we are now more focused on CASA and retail term deposits, and we have been able to shed bulk deposits to the extent of 5% during this entire year. So that gives us a strong stability on our liability resources. The CASA grew at 5%, and of course, with CASA and the retail term deposit, we like to improve our liability franchise to a larger extent. As far as the muted advance growth is concerned, yes, we are much below the par with the industry. We like to mention here that we went during the process of during this year, Q3 and Q4. Particularly in Q3, we had done the technological upgradation on core banking, and which takes its time to stabilize. Therefore, we had some spillover effect in the Q4 business also. We also were conscious of our growth in the segmental part of the RAM segments. If you find that our growth in the retail segment has been pretty in line with the industry around 14% plus. However, the agriculture and the MSME segment were a bit muted. On the MSME segment, we are facing competition from the private sector counterparts because of a geographical skewedness in our branches and offices, particularly in the northern part of the country, but wherein the private sector counterparts are much more aggressive. However, that notwithstanding this reason, we need to focus much more on agriculture and MSME, which we will take your questions when my ED, Mr. Ravi Mehra, will be answering those areas of your concern. The non-interest income, as I said, that the bank is moving towards a sustainable growth pattern, and we are rejigging our business models. We'll find that the non-interest income again during the Q4 has grown by 29%. And in fact, if I look into the core fee income also, though at a smaller base, but the core fee income also shows a steady growth of over 21%. The slippage ratio has come down. The gross NPA and net NPA numbers have significantly reduced to 5.43% and 1.63%. respectively, and the PCR as of March 24 has improved by 53 bips on a sequential basis at 88.69%. In a sequential basis, the operating and net profit percentage both grew. The sequential basis, the operating profit grew by 21%, and the net profit grew by 21.93%. The overall impact on the profitability of the entire year was primarily due to the some specific write back of provisions that we got in Q4 last year due to recovery in some big ticket resolutions. That is one of the major reasons where we had a significant NPA provision write back, and also of course the impact of the spillover impact of the DA neutralization that has happened in Q4 over that. And of course, we also in during this quarter, we have also had done some forward-looking provisions in Q4 itself. So we'll go take your questions on those when specifically it comes. So that's all, and the RAM percentage on the total advances was at also improved by 51.73%. The recovery upgradation continued to be robust in the bank, and we followed up last year. We had around 2,100 crores of recovery and upgradation, which is more or less in line with last year's of 2,085 crores, which has been done this year. The SMA asset quality on the SMA 1 and 2 front, particularly above the above 1 crore category, has continues to show a decline. And as on March 24, the overall SMA 1 and 2 above 1 crore stands at 0.84% of the overall gross advances. The capital adequacy of the bank remains healthy and at 17.16 as of March 24, with a CET ratio of 14.74%. So our bank still remains very, very strongly capitalized, and we can build on the platform that we have created. As far as the new initiatives that the bank has taken so far, as I said in my opening remarks, that the bank is investing heavily in technology. Over the last 5 years, we have invested around 800 crores in information technology systems, and in the next 3 years, we expect to invest another 500 crores of investment on various technology requirements. We also did a lot of capacity building exercises, which was a key area of identified which need to be looked into. So the capacity building exercises are also being done. We have recruited CXOs from at various positions, and now we are also moving into the other areas of capacity building. In terms of branch expansion, the bank, as we said earlier, the bank would continue to focus on branch expansion, and we have been able to add around 42 odd branches over the last 2 years. We intend to increase to another 100 branches opening in the current year. We have strengthened our CASA vertical with for liability resources, and that is paying good dividends for us. And we intend to play strongly on how to improve our CASA and have a penetration in the institutional CASA accounts in all over the country. The fee income vertical also has been strengthened, and that is showing good results so far. As you see, back to back in the last 2 years, we have been able to show reasonable good growth in the fee income vertical. We're also working very closely on how to procure defense accounts. We have taken appointed as advisor on defense accounts. So going forward, we hope that we'll be able to crack some of the accounts related with defense establishments. Now that we are in a stronger IT platform, we have also upgraded our treasury platform, as I said during my last meeting also. Now it is a time we need to, while the system has stabilized to a large extent, some minor hiccups were there here and there. Now we find that over the last 2-3 months, things have stabilized to a large extent. Therefore, we are going to improve our value-added services in our digital app, which is PSB Unique. So, and we will be taking a lot more initiatives on various areas. So that is my opening remarks from my side. And now I'm open to the question and answer sessions. Over to you, Shilpa.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to two per person and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press star 3 hash. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. I repeat, if anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. Before asking the question, I request you to please introduce yourself and your organization. Our first question is from Mamta, an individual investor. Sir, her question is, what is the OPEX growth and can you quantify how much is staff expenses and other expenses? Second, what is the loan to deposit ratio for Q4 and what is the target for FY25?
Okay, so I'll take the second part and then move to the first part. The CD ratio of the bank was 71.99, nearly 72% in Q4, and we intend to bring it at the level of 73 to 74 going forward. So that is the second part of the question. The first part was on the operating expenses. It is, if you see our slides on slide 18 in our presentation, the operating expenses for the quarter was 766. It has actually gone down from 824 crores in December 23. And that is for the quarter. And for the entire year, the operating expenses was at 2,931 crores. The establishment cost, I think that was an answer question for that. The establishment cost for the establishment expenses for the quarter is at 513 crore. Again, if you see the compared to the Q3, the establishment expenses dipped from 547 crores to 513 crores. However, overall, the establishment cost increased from 1,544 crores to 1,944 crores, 400 crores increase for the entire year, and that is particularly due to the impact of the wage revision.
Thank you, sir. Our next question is from the line of Mr. Ashok Ajmera from Ajcon Global Services. Sir, please go ahead with your question.
Yeah, thanks for the opportunity. Uh, yes, sir, definitely the results as far as the profitability is concerned for the quarter are very good. I mean, both the operating profit and net profit are higher than the last quarter. But my concern, as you also raised in your opening remark, is mainly, which I have been repeating in every analyst meet, is on the growth prospects of the bank. When like we are at a very, very low base level, and from here we can take a big jump, quantum leap from here. But what is happening is that in spite of all the assurances and even the technology upgradation which is going on for last 2-3 years, discussions and talking, ultimately it is not reflecting in the results, in the achievements. The credit growth of just 6%, uh, uh, this quarter, of course, it has been little better, and RAM also is now 51.73%, corporate book 48.27%, whereas other banks are going for much higher RAM and rapidly expanding the business as well as the corporate book also, especially the MSME. What I feel is that the banks uh, lending infrastructure, not necessarily only digital, even the manual, the underwriting. I mean, we have to go a little above the board to appraise the proposals, whether small, MSME, and take the right call on that. Take little risk also, because ultimately from MSME, we are going to get a big chunk of business. We have to compete with the private sector bank, I understand, and other public sector bank, but this is where we can put in more efforts so that we can get good results. This is my first question.
Yeah, I appreciate your point, Mr. Ajmera, and whatever you have informed is quite practical, and those are the areas which we need to work upon. I request my ED, Mr. Mehra, to answer what Mr. Ajmera is concerned about lending infrastructure in the bank.
Good afternoon, sir. Ravi Maharaj
Good
this side.
afternoon. Good afternoon.
Sir, very rightly said by you that our growth is muted in the advances side and not as per the expectations, but there are few things which we need to take into consideration. First is that as what MD sir told in the opening remarks, that we are rebalancing our credit portfolio, moving from corporate to this RAM segment. And once we shift towards RAM segment, the quantum jump generally is not seen in that context as compared to the corporate. Secondly, recently last year we have moved our entire RAM segment portfolio to the back-end processing center. So when such kind of structural and transformational changes take place in a bank, these things sometimes the things get slowed down because the branches, because earlier we were doing all the things manually. Now the things have been moved to LOS, and each and every proposal, barring some very few value loan accounts, be it retail, agri, or MSME, that has been moved to the back end. So things take some time to settle down. Secondly, in October, we shifted to migrated to our Finacle 10 platform as well. So such technological changes which totally change the platform also need some stabilization time. That is why we could not grow this year. But definitely, whatever you said, that is well taken, that yes, all the things are set aside. We need to grow. And this year, we need to work on all the product optimization and whatever we want to do to be in line with the industry benchmarks, sir.
What is the target you give
Sorry?
on credit? What is the target you give on credit this year?
Sir,
FY25.
basically, what we are seeing that we are targeting a growth around 10 to 12% for the credit. RAM segment somewhere around 14% that we are targeting. And under the RAM segment as well, we can say that the MSME will be somewhere around 13-14%. Agri will be somewhere around 8 to 10%. Retail we are almost at the industry level of 40 or around 15%. Retail will be doing the same way. And under that, the overall RAM segment, we'll be exploring that co-lending this platform, adding more partners to that thing, then bringing digital sanctions as well. So this is our guidance for this year, sir.
Sir, now I come to some specific points of information. Number one is that you said, sir, that overall our employees cost, from 1544 to 1944, 400 crore. That is because of the wage revision and some of these other factors. So going forward, what will be the run rate on employees cost on a monthly or quarterly basis?
Yeah, in fact, the cost will be moderated, and whatever cost has been borne in FY23-24 will have a lesser cost in the overall macro picture. Overall, lesser cost during 24-25 on establishment. So we will be saving some amount of money there.
All right, sir. This on note number 9B, NPA account has been transferred, one account for 14.83 crore outstanding, and consideration 1.67 crore. We have received cash of only 0.25 crore. it is sold to the ARC. Is it NARCL or which ARC?
Yeah. This is the resolution under NCLT for a corporate account.
And why we have not received the SR so far? It is said that SR is yet to be received.
I think, madam, can you just throw a light on this? This is simplex, I think, no?
So we have received now in that, sir.
You have received now. Okay.
Now we have received. So earlier we have not received. Now we have received, sir.
Because it is these are generally the simultaneous transactions actually.
No, there is some lag effect happens.
Yes, sir.
So now we have received that. She is confirming. Yeah.
And sir, this another note of the stress loan NPA and SMA. There are 3 accounts, 186.30 crore. The consideration is 134 crore. So this is all cash consideration.
Yeah, all 100% cash sold to an ARC.
This is that was power and water.
Yeah.
Okay.
That was already in the public domain. The news was in the public domain.
Yeah. Yes, sir.
And we got one of the best recoveries in the industry by this.
Yes, sir. I understand. Thank you.
Thank you,
for
sir.
that. Now, sir.
So our next question is from the line of Ms. Palak from Elara Securities. Can you give breakup of slippages and what is the total return of pool, of which how much is NCLT and non-NCLT?
The slippages breakup is in slide number 16. Out of the overall slippages of 370 crores, retail slipped at 60 crores, agriculture was 184 crores, MSME was 115 crores, and corporate and others was 11 crores. That is the slippages that was done. And what was the second question? Sorry, Shilpa.
What is the total return of pool, of which how much is NCLT and non-NCLT?
Huh?
And can you give breakup of slippages?
Total return of which 7,200 crore to TW total, and out of which right now we are not having the figure of what is the about NCLT.
We'll provide the data separately. I didn't still understand the question very well. I'll give the data separately. Yeah, but slippages ka jo quarter ka slippages I've already mentioned in the. Is it mentioned in your this chat? The question? No.
Yes, sir. Yes, sir.
Anyway, we please move on. I'll try to get the answer for that. Yeah.
Okay, thank you, sir. Our next question is from the line of Mr. Choksi. Sir, please go ahead with your question.
The analyst call and giving me the opportunity to ask question. Sir, I heard your remark about the growth pattern, the technology upgradation, and all the changes, including the cost which had gone up, led by human resource under the IBA, the norms which you provided. Now, looking at our current structure, will only technology and upgradation and reforms or moving to back office is going to change the future outlook, or there is something more dramatic needs to be done?
Yeah, thank you for the question, Mr. Choksi. I think there are two ways of looking into things. One is we need to grow, and the second part we need to grow qualitatively. So we have to address these issues on simultaneously. So the transformations and structural changes happen keeping in mind both these considerations that we need to implement. So why we move the back office structure, it is important to assure from the regulatory perspective also to segregate the sourcing and sanctioning of loans. So that's a regulatory issue. And it also gives a lot of quality. And in fact, we find that since we have implemented this back office structure in the bank, the delinquency and the SMA levels is bare minimum in this structure. So we have learned from our past history and legacy loan book and the ways we did our credit delivery. So and that structure had to be implemented both as a from a regulatory point of view and also from the qualitative point of view. So we have more such transformation exercises that are in the annual. One, of course, is opening the back office structure for opening of CASA accounts. We're going to build in, and also we'll follow it up with the implementation of the tap banking for customer acquisition. So there again, we will be having certain work for us to do. We're also going to enter into the forex trade finance module, which is a task that we have taken on ourselves, and our forex business also needs to be looked into in a much more granular fashion. We have very limited forex business, though our treasury is quite effective in terms of treasury functioning. However, the forex business as such has caught up. So that we required a lot of technological interventions. For that, the first stage was to have the core banking and the treasury solution getting upgraded, and the next step is creation of back office structures for the forex business, and also create the forex module for trade finance, which many of my competitor banks are offering. We on the technology front, we will also move on. As I said, that we intend to invest heavily further in information technology. We have already invested 800 crores over the last 5 years. We intend to invest another 500 crores for the next 3 years, including the one of our critical project of a data warehouse. And once we have those data warehouse and the in place, though it's a long project, the gestation takes around 36 to 48 months, but it is very essential for the bank. So we are going to venture into that, investing in that data warehouse project, which will also give a lot of insights in the data part and customization, and then move on AI ML subsequently. So those are some of the transformation projects that we need to implement. And as far as the parallelly to answer the second part is the growth. How do we manage the growth? Yes, if you see 22-23, we had a decent growth in line with the industry. 23-24, we had the factors of external movement of the interest rates very aggressively, and on a CASA ratio of around 31 to 32%, managing liability resources and managing LCR as per the regulatory guidelines becomes a challenge for banks of our size and network. So we had to rebalance our portfolio very efficiently and quickly when the interest rates moved very significantly, and the migration of the CASA moved to the retail term deposits. So, but the more important point which I like to tell here is that while we are sacrificing growth at this point of time, maybe we are not at par with the industry, maybe your analysis of ours will not be favorable for the bank, but we also need to appreciate the point that the more importantly for an organization is to have a sustainable growth. And I am very sure with some of the banks have grown very effectively and efficiently, but with a difference of more than 5 to 7% differential between credit and deposit growth, I'm not very sure whether those growth stories will remain sustainable going forward. But we need to, as far as our book is concerned, we are, as Mr. Ajmera has said, we are at a low base. We acknowledge that fact, and we need to grow faster and faster on a qualitative basis. So we are rejigging our entire structure. We are rejigging our entire business processes. We are bringing in changes for quicker delivery of loans, renewal and review of accounts. We are bringing in systemic review of renewals of working capital and term loans, so that repetitive work goes away from the branch and they can more concentrate on core business. We are going to revamp our call center. That is another area where we are strongly focusing on, because today call center also becomes a profit center, both from the monitoring aspect and also on customer acquisition and lead management. So we are moving in, and we have a 1-year project for revamping our call center. So keeping all this mind, these are some of the steps, the fundamental steps which we are building into our system. Though we are late, and these things have been implemented many banks much earlier, but at least we are now working on those directions to build those platforms where we can have much more sustainable growth. So the branch expansion I've also talked about. We intend to expand very strongly in our branch network, ATM network, and BCs. Another area where we are strongly working on is implementation of the BC network in the bank. 2 years ago, we had hardly 357 BCs. Today, we are having 1,709 BCs. By the end of the financial year this year, of March 25, we intend to have 4,000 BCs in the bank, and by 26, we intend to have 6,000 BCs in the bank. So this is another area which will help the both on the acquisition side, monitoring side, and I'm very sure if we can implement these sort of structural processes in the bank efficiently, the bank will much more be on a stronger platform for a healthier growth in the future.
Sir, I have noted your comment on a positive side led by all the CAPEX, digital initiative, call center, back office, processing changes. But technology can be bought, but human resource, whether it's top to bottom or bottom to top, if that is not aligned with technology, your entire effort may take a futile time or a longer process. So what have we done where human resource integrates with the updated technology so people transform, bank transform, and the shareholders also get transformed, which is predominantly Government of India with the holding they have. And second question is on your current treasury should be a big benefit, because today I see the positive side on your because of your holding, maybe because of the inclusion in global indices, a treasury should give you a substantial profit. And third is, despite all your efforts and challenges, do you see cost of income in the current tenure of Ravi Mehra and yourself, a cost of income going towards 50-55%?
Yeah, all very important questions, Mr. Choksi. Thank you. I appreciate your questions. And exactly, yes, I missed out. I did give a hint on what we are doing on capacity building in my opening remarks. Firstly, we have got 4 CXOs, CFO, the CCO, the CRO, and the CTO in the bank on a different recruitment methodology, which will add value to my key positions in the bank, number one. Number two, lot of focus has now been given on trainings of our staff members, both in India and abroad. We have identified people, executives, top executives in the bank who deserve further training and who can be groomed as future leaders in the industry. We are also a very effective part of the overall DFS and FSIB initiative regarding grooming of DGMs and GMs on the industry-wise pattern, which some of the banks, all the banks, in fact, public sector banks, are working on. We are very much. We are now. In the morning itself, I was attending on training program today on the zonal heads on leadership development with a very reputed institute in CR. There again, we are trying to project that the capacity building of our people has become very important. Internally also, we will be recruiting much more specialized positions in the bank. We have identified those positions at various levels from 2 to 5, scale 2 to scale 5. We have taken the necessary board approvals for that. And those positions will be, because of the code of conduct issues, we have not been able to go to the market for advertising those recruitment methods. So as soon as the code of conduct ends, you will find a lot of activity going on in terms of recruitment at specialized positions, particularly on where domain knowledge has becomes a very key factor. So yes, we are very much focused. We understand that IT and HR together are the two pillars of banking financial sector. So we are giving very much, a lot of importance on that. And on the second part is regarding treasury. Yes, as I said in my remark also, I know that how treasury can become a game changer for any organization, and therefore there again we are building capacities. And if you find on a comparative degree, if you have analyzed our performance on yield on investments compared to other banks, I think we stand fairly well in terms of our comparison on the yield on advances, yield on investments compared to other banks. And though a smaller treasury, but we are effectively managing the treasury. And going forward, the treasury, this was particularly the domestic front. And as I already mentioned, now we are now focused on the forex business, particularly because we have opportunities on forex business. So if we can build platforms for forex business and bring in expertise in the treasury and in the authorized dealer branches, I think we can give good returns, and my team can get returns there. And your last question was on cost to income ratio. Yes, the bank has a legacy of the higher cost to income ratio. We were able to pull it back a bit in 22-23 from 65% to 62%. But due to the wage impact that we have this year, the cost to income ratio annually has moved up to 72. But for the Q4, we have been able to pull it back below 70. But that's not a comfort that we are lying on. But going forward, as you said, whether in my tenure or Mr. Mehra's tenure, the cost to income ratio will come back to 50 to 55 range. I don't predict that range at this point of time, but we surely predict that this will be below 60 in another 2 years' time.
Sir, my question on treasury, you may have answered or I have not completed the sentence properly. With our indices getting included in JP Morgan, Bloomberg,
Okay. Yeah.
India is likely to be having a bonanza or not, that only time will say, where inflows are concerned. Now, how are we positioned to capitalize on the treasury book which we have on one side? The other side is, I've asked this question to most of these big banks, peer banks and PSU banks. The inflow has to be managed, whether it is forex, participant, the kind of paper you own. Have we done any internal to maximize the profit out of the holdings what we have?
To a little extent, yes. Not to the maximum extent that you expected. See, first of all, we are going through the transition on this new investment policy of the RBI. So all of the banks, you must be also knowing, all of the banks have now rejigged their portfolio and have made the required changes as per the new treasury guidelines, which is to be implemented from 1st April. So we also have now rebalanced our portfolio, and certain you must be all knowing what are the key areas of differentiating between two policies before and after. But as for now, what we have done is that the overall, as we are allowed for allowed once for shifting of securities, but under the new treasury guidelines, we have shifted a part of the securities to the trading book, and which in case we expect that of course there will be a rate cut sooner or later, maybe second half of the year, we will be able to generate some income there. But the other side is that the fluctuation due to the MTM on the treasury book, which was earlier creating some conflict in the overall scheme of things, that has eased out. So the MTMs will now be part of the overall reserves of either HTM or AFS, and therefore the balance sheet will look much more steadier, if not healthier. It will look much more steadier than what it was before. And as far as your specific question on whether we have done any homework on building this portfolio, we are, because it's just a transition stage that we are in. It's just 1.5 months old. This policy has been implemented. The markets have moved in a different direction so far, as which we were expecting a month ago. So therefore, we are observing this trend very closely in our treasury books, and maybe as we go forward and build up the our capacity in our treasury department, as I was mentioning a few moments ago, we will be able to capture more and more possibilities that come out of this new regime. How that JP Morgan index will impact our portfolio, that time will say, and we are not in a position to comment on that. But we will be looking out for opportunities to. My Treasury Department will give more returns to the bank in the present circumstances.
Thank you, sir. We have a follow-up question from Mr. Ajmera. Sir, please go ahead with your question.
Sir, I have just a couple of, again, specific questions in the explanations. Sir, looking at our size of the bank, RBI levying a penalty of 2 crore in the whole year and 1 crore in this quarter is a very, very big amount for us. So what is this penalty has been imposed for, and what corrective measures are taken to avoid this kind of penalties in future? Note number 60.
Yeah. The penalty that was imposed on the bank that you are referring to has been industry-wise penalties that have been imposed on all banks which have an exposure to a particular state government account. Whoever has exposure in that account, RBI thought differently on certain regulatory issues. The account is standard. There is no default in the account. But in terms of RBI's scheme of things, they felt that the banks should have been more careful in selecting the borrower and understanding their cash flow. So it is not a one-off case that has happened with our bank only. It is an industry-wise penalty that has been imposed on all banks which have had exposure in that government account. It's a state government account.
So it's a one-off only for
It's a
even us.
one-off. Yeah,
one-off
it's a
only.
one-off case. Yeah.
Sir, in note number 14, on these two accounts which are under litigation, funded exposure is 119 crore. Adequate provision has been made. So what is that adequate provision amount out of this 119.28 crores?
Adequate means in an account which is under litigation for quite some time, because we classified as account as NPA, but the borrower went to the High Court and said, don't declare it as NPA. So that litigation is happening, but we have provided 40% in that account. What is the second one? How much? Oh, that is only a small account of 5 crores. So that is also adequate. So major account is that one mid-corporate account in which we have been declaring consistently, and based on, so if account slips also, we are adequately provided at this point of time.
Sir, what is our total portfolio of written off or AUCA accounts in aggregate, and how much annual recovery target we have to recover from that written off accounts?
The overall TWO portfolio is around 7,200 crores. Last year, we had a recovery of, I think, 700 crores, if I'm not mistaken. 758 crores. My numbers are correct. 758 crores. And this year, we intend to have a recovery in TW of 500 crores. Overall, we intend to have a recovery upgradation of 1,500 crores.
Including this 500 crore.
Yeah. Because you see, as a bank of our size, the major accounts are getting resolved one by one. Last year, we kept a guidance of 2,000 crores overall, and we achieved them. This year, because we only have one or two big accounts under resolution with the NCLT/NARCL, so we have. That's why the opportunity of recovery will be a bit less than last year.
Sir, when do you expect this our gross NPA coming down below 5%?
this year itself, very soon.
Very soon. In fact, last year also we were hoping this year, which concluded.
We
that it
we
should
are
come
already at
down.
5.42. See,
Yeah.
we appreciate the point. Last 2 quarters, we have not resorted to write-offs, technical write-offs, which many banks normally do. We have also done in the past, as of not that, but we feel that we still have room on that. So it's just a matter of balance sheet management when we take the call and bring it to below 5%. It's just a matter of time now.
Sir, I'm not sure whether this question was answered because for some time I was off the call. How much is our project loan portfolio, which will get attracted if these RBI guidelines get implemented?
We have assessed that portfolio. The numbers, I think you are more concerned with the provision impact than the actual number of.
Yeah. So total about 15,000 if it is total. I mean, including all infra and everything.
Yeah.
So out of that, how much is project loan?
Yeah, I'll tell you. We have done some analysis there.
Yeah.
In terms of our first year impact, which we are, see, there are various phases of this RBI circular. One talks of borrowers are falling under operational phase where the balance outstanding is more than 80% of the limit.
Yes.
One is where the balance outstanding is less than 80% of the limit. And there is another phase called the construction phase. So putting all these three, first, in terms of those which are in the operational phase, we have a portfolio, as this is all back of the envelope calculations, we need to work closely on that. Overall, the figure will be around 5,000 crores on the balance outstanding. And the impact which he foresees is around 100 crores, provided RBI brings the circular as it is. We expect that some moderation may happen. But overall, we feel that the operational phase, if you take the operational phase into consideration, the impact would be around 100 crores odd. And
for extra provision. Yes.
That is, and of course, there are other considerations in this area. Accounts which are under construction, which has not been disbursed so far. So we don't know when these disbursements will happen. There are certain, what I told of 100 crores is already which have been disbursed, and the projects have been made operational. Some projects are under disbursal, and we don't know the actual drawing of the loans. So if I take that on a rough back of the envelope calculation, if I include that, another 40-50 crores may add up, depending on the actual disbursements that happen. The provision will be actually on the outstanding, so we don't know at what is very difficult to predict at this point of time. So we are looking at the overall 150 crores of impact for a current year.
So with the kind of planning, your CD ratio is already 71.99%.
Correct.
Up to what CD ratio you will be comfortable if your loan book growth?
We'll be comfortable around 73, 74, 73 odd. That would be between 72 to 74. We'll average ourselves accordingly. We are already at 72.
Yeah.
So maybe 73 would be a fair enough CD ratio for us.
And sir, one last question in this round. A lot of banks, including all the public sector bank treasury, who are dealing in the equity treasury, they have made a lot of good, handsome money from the IPOs, investing into the IPO, whether SME or a main board. Do we have any figure or number that are we, number one, are active in that area? And if yes, how much profit have we made on that?
Mr. Ajmer, we also do a bit in equity profits. I think we have done around 17 crores of income on equity.
Oh, that's good.
That's through IPO only.
Through IPO only. Yeah. Because I was told, I think like Central Bank or this thing, they made some 55 crores. Some bank has made 80 crores. But depending on the size. So 17 crore is a decent amount looking at our size.
4x times, depending on the size of the book.
Yeah, of course. Okay, sir. Thank you very much and all the very best, sir.
Thank you, Ajmerji. Thank you very much.
Thank you, sir. Our next question is from Ms. Shivani Kumar, an individual investor. Ma'am, please go ahead with your question.
My question is, what is your opinion on recent RBI draft guidelines on project finance, which requires higher provisioning by lenders? Also, what is our exposure there, and would there be any impact on our bank?
That's exactly what I just said to the previous question. I think you may have missed it out. I may repeat it at the cost of repetition. The overall impact in terms of provisioning, we look into around 150 crores. The book which is involved in this is around 6,500 crores. And if RBI brings the circular in toto as the draft circular envisages, that's the current position. But this is a back of the envelope calculation. Many granular calculations will be done on this front.
Thank you, sir. We have a follow-up question from Mr. Choksi. Sir, request you to please go ahead with your question.
On the depository, not in the bond index inclusion, what my question had further this, are we doing any synergy with any of the participants like foreign brokerage houses or PDs or anybody where we get maximum capitalization on buy sell or as well as FX trades?
No, not yet. We have to reach to that levels in our operations of treasury. But if you ask me separately, these are things are in mind, but we have to build up some of our people to manage this sort of dealings. So
if we are looking,
we move steadily but surely in this direction, and that's why I'm also recruiting some specialists in treasury and forex going forward to take these things as a part of their business strategies.
Sir, you highlighted a lot of initiatives for processes, human resource. How are we rectifying the business segment where RAM is concerned and retail is concerned, whereby with CD ratio moving up from 71 to 73 or 74, we have hardly any appetite left for large businesses and large ticket loans. So the only way you can earn a super profit is your RAM segment or retail segment gives you a sustainable profit at a good, and not only home loans, because I see year on year portfolio has not done in sync with the bank's balance sheet. So I suppose these two segments is somewhere where you'll have to look at a larger, because that pie is larger and your NBFC, HFC is almost at a cap sector. And the reputation in retail and RAM is the most essential part of a good partner in the bank. And that partner in the bank, if it's not existing, then the customer is not going to become the first point of contact.
Yeah, I appreciate your point, Mr. Choksi, and we'll keep this in mind in our future strategies. In terms of income generation, while retail, we will be focusing in various areas on personal loan also, which will give me higher returns. On the MSME segment, we have one of the very important product that is helping us is the GST ease loan, where our delinquency is at a bare minimum, and we are getting a lot of good vibes and a lot of good projectiles in terms of our portfolio growth in GST, and that is where we will be focusing on for our capitalizing on the yield on returns on our assets book. So we have plans for that. For that, we need to. We are also moving into the co-lending segment very strongly, both on the retail and MSME side. We have already built a book of 2,300 crores of retail plus MSME. We intend to build this book to 4,000 by the end of the current year. And this here again, our experience on co-lending has been very good and satisfactory. So we think now that we will be able to build on the platform and the way we are doing our underwriting in the co-lending segment under the RBI guidelines has playing off well. So we will be working very strongly on the co-lending front, where we can look into high-yielding assets also. In fact, because of the present juncture, RBI on putting some restrictions on NBFC regarding gold loans, we are just observing that area also, because that is a potential area for us. Our gold loan portfolio is also showing healthy growth, and we have checked our internally, we have put in checks and balances for quality growth. So gold loan again gives us either from the standalone basis growth or on a co-lending side, both will give us good yields in terms of our growth. So point well taken. Housing loan will have a different connotation, but the other areas will also focus strongly. In fact, our gold loan portfolio is growing at 27% at a lower base. So we have a strong area of growth which we will pursue in the current year as well.
So all the best in all the aspirations which you have at Punjab Sindh along with your management team.
Thank you.
Hopefully,
Thank you, Mr. Joseph.
Prime Minister and the Finance Ministry doesn't go for a next year's further amalgamation. So we have a year-on-year discussion when the next year ends. Thank you.
Yeah, thank you.
Thank you, sir. We have one last question from Ms. Myra Mittal, an individual investor. Her question is it possible to move to a lower tax regime for FY26?
Actually, this tax, it is an optional thing. So according to the, because we have deferred tax and VAT assets in our books, so we'll look out a appropriate time when our balance sheet profitability can absorb that thing, then only we'll move to it. So it will depends on the how the figures move on the next year.
Thank you. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 99306-25104 or mamta.samant1@dentsu.com. Details are mentioned in WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference call today. You may now disconnect your lines. Thank you and have a good day ahead.
Thank you, Shilpa. Thank you all the participants for joining in this phone call. Thank you.